please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Poddar and with me is Mangalam Malu, and let's take it straight to first Power Grid press conference.
One land or 7 city we have kb one land is equivalent to 4 land of 400 kb. That's why it says 1,48,000. But if you compare with the base of the 2012, in the 36,700 you have to add 4 times capacity wise. That's why this is important, because now we have the big base. That's why the kilometer wise it is not increasing, capacity wise it is increasing. This is the technology things, because if you put the same transmission line, we will not able to carry the power so big, because transmission requirement, power requirement is increasing. To save the right of way, we go for higher voltage. Come next. The performance wise, as you know that we have met all the target. In full year, we have done the 9,250 kilometer of line.
All right, so that was the management of Power Grid detailing their numbers. We will keep getting important data points from there and flash it on the ticker for you. In case there is something important going in, we will dip into that as well. But meanwhile, just keep an eye out on the markets. We're closing in on the higher end of today's trading range, as well as the European markets. While the frontline indices are mildly in the red, just keep an eye out on the Italian index. After losing about 2.6% yesterday, that one's opened in the green, sitting with a gain of almost 2/3%. So we'll keep an eye out on all these individual indices across the world. But you have more, Nisha?
Oh yes, our Indian markets that had really been impacted by the global markets as well, and especially the Italian crisis, but it has recovered a fair bit from the lows of the day. And as we look at the markets, what has really gone into the green is Bank Nifty at the moment, so it's outperforming the overall markets. The mid-cap index is also touching that green line as well, so looking a little better. Mahindra & Mahindra is the one which is really being probably awarded by the shareholders after their results yesterday. Let's get in some important opinion on the markets going as well. And Udyan Mukherjee caught up with emerging market specialist Julian Mayo of Ferra Capital as part of our special series London Eye, and he says that the outlook for emerging markets is positive, adds that the India's mid-caps are disappointing.
There's obviously a bit of uncertainty going on at the moment, as you said, surrounding the dollar and some of the external imbalances of some of the emerging markets. But I think overall the outlook is still relatively positive, because you've got positive earnings growth momentum, if you like, in emerging markets. You've had a growth recession really between 2011 and 2015 in the asset class. You've had 2 years of a recovery of that, but I think that the trend is still positive there. Corporate profit outlook is still good at the moment. You had a big spike in profits last year, again after a profits recession over the previous 4 or 5 years, and I think the outlook continues to be good double-digit growth across the asset class for this year and probably into next year as well. The macro determines your cost of equity. How expensive should a stock be? Where should it trade? What are the risks to the valuation? And so I think in the case of India, there's been this feeling that it's a good long-term story. You've got a good long-term growth story in India in which to invest. The disappointment for example, in India has been at the micro level, the performance of stock. Ultimately the stock market is a market of stocks, and the performance of the individual companies, aggregated is what makes the market where it is. We look at India as and we like the businesses, we like the macro, but we're sort of frustrated in many cases by what's happening at the micro level. You do have pockets of instability, I think, within the emerging market currencies, but for the bigger emerging market currencies, and I'm talking here about China, Korea, Taiwan, and India, which are obviously the 4 countries that make up 2/3 or so of the emerging markets benchmark. I think the currencies are in reasonably good shape. So I think overall emerging markets currencies are undervalued. What's happening at the moment is that the dollar is strong, but it's not as if you got dollar strength versus EM weakness in a polarized basis that you sometimes have across emerging markets. What you have at the moment is you've got dollar strength against all currencies.
And you can catch that full conversation at 8:30 p.m. today only on CNBC TV18.
All right, just keep an eye out on individual stocks. They are buzzing. The PSU Bank Index is at the high point of the day. The Nifty barely points away from breaking into the green, recovered 60 points from the lows. And SBI is the stock that should come up for you, recovered 2% from the lows, leading the PSU Bank Index higher. But one stock which has been gaining is Coal India. Among the top gainers on the Nifty, posted a mixed bag this quarter with a lot of one-offs. However, we spoke with the management, Samiran Datta, the Chief Manager of Finance of the company, on the highlights of the quarter and the outlook for FY19 going ahead. Listen in.
For Q4, the realization overall was 1573 rupees per ton. This is on the backdrop of both the revised prices as well as we have a component of e-auction sale, which also had registered good growth. On Q4 basis, if I can say, it is 1573 in the current year versus 1495 rupees per ton in the previous year. FY19, we have already registered a growth in production of around 16% and also in offtake of around 13%, which is still running through May. We are targeting 630 almost production-wise million tonne, and so will be the offtake. So we expect a very good growth during FY19. Without the support of the railways, this sort of evacuation would not have been possible, what we witnessed in the last year. And the rake availability and the tracks, also new tracks coming up, has helped immensely. And now that two of the important lines that we were waiting for has been opened up, so it should put us in a better position for more evacuation during the current year.
A very strong recovery is being seen in the markets at the moment. Sensex is in the green. Nifty is just racing towards that green line as well. Mid-caps in green, and Bank Nifty is the outperformer at this point with 0.35% gain. So keep an eye out on that market recovery that we are seeing at lunch hour. More on news as well as the markets on the other side. Stay tuned.
All right, it is lunch hour and the Nifty has moved into the green. Just keep an eye out on all these indices. The Nifty Bank is the one which has led that index higher. Earlier, we got some support come by from private sector banks, Kotak Mahindra Bank, which is at the high point of the day, IndusInd Bank as well, which is at the high point of the day. But now the additional support has come in from PSU banks. We've spoken about SBI, but just take a look at the other PSU banks as well. We have the likes of Punjab National Bank, Bank of Baroda, Canara Bank. All of them should come up for you. So we are seeing a sharp rally in those PSU banks. Private banks leading the Bank Nifty higher, PSU banks supporting. So we'll keep an eye out on that. As of now, the Nifty as well as the Sensex and the mid-cap index all in the green. The stock under pressure though is Glenmark, still reeling under some pressure after reporting a weak showing in this quarter. We spoke with Glenn Saldana, the chairman and MD of the company, earlier today, where he said that FY19 will be better if the company continues getting approvals. Also adds that his free cash will help in bringing down their debt. Listen in.
If we continue getting approvals, right, we will be much better in FY19 than we were in FY18. Purely, I mean, if you see, Q1 was a big positive because we got these two big approvals, and that itself will, you know, for the quarter will overshadow the price decline that we will see. Everyone is facing pressure in the US, right, and it's very hard to predict what the US margins are going to look like going forward. But I think so far we've done a very good job in maintaining our margins and managing our margins. So, I mean, I think on a full year basis, the margins will continue to look reasonably good, but we are not providing any specific number. We will generate free cash in FY19, clearly, which will go to bringing down the debt. In addition, you know, we have some corporate actions underway, which we think will further accelerate the reduction of the debt. And then, of course, out-licensing will be, whatever cash flow we get from out-licensing, again, will go towards lowering the debt.
All right, one particular stock in focus is Manpasand Beverages, and take a look at that particular counter. It's down and out today, locked in a lower circuit of 10%. And if you really look at the 1 week chart of that particular stock, well, it has fallen from 428 rupees per share consistently. So about 200 rupees kind of a fall that we have seen in the last few trading sessions. And remember, Saif Partners backed Manpasand Beverages share tanked because of Deloitte, which is the auditor of the company, resigning just ahead of the FY18 results. Now, the stock is under pressure after hitting lower circuit for the past 2 trading sessions. And we spoke to Vishal Sood of Saif Partners, who says that this was an avoidable situation. And he thinks that Manpasand pushed too hard if auditor was not ready to sign the earnings.
Had got delayed. We have provided all the information. We acknowledge that there is some information pending, but we believe that we have given you enough information to be able to approve the accounts, because again this year we don't want to delay it. And my understanding is from both sides that the management took a stance that, we don't want to delay it so much, and the auditor took a stance which must be, I don't want to delay it so much, and the auditor took a stance which must be as per their internal processes, that we need this information before we sign off, and that caused them to resign. That is my understanding, what I could confirm from both sides.
All right, so we'll keep an eye out on that story as it develops. But let's move on to Bank of Baroda. Then, after reporting a loss of over 3,000 crores on the back of a sharp spike in bad loans in the quarter gone by, Bank of Baroda is now stepping up its efforts to clean up its book. Ritu Singh joins us with more on that. Ritu?
As has been the case for most other public sector banks, even Bank of Baroda reported a sharp spike in bad loans and a resulting loss in the quarter gone by, and therefore the bank is taking steps to ensure that it brings down some of its gross non-performing assets. So now we understand that Bank of Baroda has put a non-performing asset portfolio of close to 3,000 crore rupees on sale. So it has invited expressions of interest from various agencies, banks, ARCs, etc. to come and buy that portfolio. That total portfolio that I said is close to 3,000 crore rupees and includes accounts such as GVK Coal Developers, Lanco Resources, Aban Holdings, GTL Limited, JBF, Rolta, Anirudh Aluminium. Some of these accounts are also featured in RBI's second defaulter list to be sent to the NCLT. So clearly here's the bank trying to clean up its books in some of these smaller accounts where, it sees lesser recovery. It is trying to sell off now. Why this is significant is because all of these accounts put together form, over 5% of the bank's current total gross non-performing assets, which is why, which currently stand at 56,480 crore rupees as of the last quarter. So the sale of these assets will help ease some of the pressure on the bank for sure.
All right, thanks Ritu for giving us all those details. So keep an eye out on the markets, because markets in the green at this point. Huge amount of really support was coming in from Bank Nifty at this point. All right, we'll slip into a short breather on the show, but up next we get you an excerpt of an exclusive chat with Indian Hotels. All right, take a look at the markets. Tentative at this point, yes, in the green, but has been really shuttling between the red and the green when it comes to Nifty 50, and a huge amount of gain that was really showcased, and the momentum showcased by Bank Nifty is also coming down a bit, and mid caps also slipping into the red. So at the moment, flattish on the markets, but clearly the recovery path that we were seeing is ebbing down a little bit. One stock which is really doing well is India Cements. That has spiked up in the last few minutes of trading session. TVS Motors is another one which is also gaining a huge amount of momentum and is supporting the market. All right, let's take it straight to some of the developments today and some news, with HUL really reporting a double-digit volume growth, and in the backdrop of analysts really raising the red flag on how sustainable this growth is. Nielsen India has come out with a report that says that Indian FMCG is in a stable place. CNBC TV18 spoke to Samir Shukla, Nielsen South Asia's executive director, who said that industry growth may not be as high as 2017, but it is going to be strong nevertheless.
We are still in good times. So while growth numbers may go up or down because of base effect, either on shipments or earnings or because of the consumer offtake, see, in Q1 of 2018, our estimates, Nielsen estimates, have been in the range of 11% plus, which is a decent growth. It's a double-digit growth.
Yeah.
Now, even in Q2, of 2018, which is the current quarter, we are expecting that industry should grow in high single digits, close to 9% or so. And full year estimate for 2018 is also in double digits. So I would say that the growth momentum is intact and it's largely led by rural growth.
All right, let's move on then to a big CNBC TV18 exclusive. In his first ever TV interview, Puneet Chatwal, the new MD and CEO of Indian Hotels, spoke with Kritika Saxena on the company's debt reduction plans involving sale of certain assets and much more. Listen in.
Going forward, and as the industry has witnessed in the last 5 to 10 years, the models of management contracts, franchise contracts, third-party managements, joint ventures, affiliations, marketing alliances, all different models have come in.
Yeah.
As we are a 115-year-old company, we are more asset heavy, having more assets in ownership than anyone else has. They are also very margin enhancing for us. But I'm not sure if any secondary market or tertiary market or semi-tertiary market today needs investment from us. If that's strategic enough for us to invest, and I think that's where we would look for management contract growth. We would also look to monetize in many places where we have the FSI and the land banks, for example in Goa, in the current properties, we can build more as we have the FSI to do so. I think that's a part of the strategy in terms of restructuring and maybe even selling it off, partnering with third-party developers who would develop, build, and we would operate.
Are there any assets that you would want to exit or sell out completely?
Definitely, there are some assets which we would.
How many? I mean, I know you wouldn't want to name it, but how many roughly in the next 1 year?
Well, it depends on which brand. On Taj is very few. On Ginger there could be many which we would want to sell and maybe lease back or manage them back. And Vivanta there's almost none because it's a relatively new brand. So almost
So could we look at maybe 10, 15 different portfolio complete exits altogether?
If we achieve 10 would be like 2 per year over the next 5 years, I think I would be very happy.
That was a concern before you stepped in. It has, in 2016, it was 4,500 crore rupees. When you came in, it was roughly 3,600 crore rupees. It's come down to 2,300 crore rupees right now, thereabouts. What's the plan then? You have substantially reduced this. Would it be in a similar pace? By how much more can debt come down, say, by the end of FY20 or FY19?
Well, I think the challenge is not any more reduction of debt because the debt to equity ratio is much healthier than it was before.
Definitely.
So I think some of the debts at a certain percentage levels which we can pay, especially overseas, we might do that over the next few quarters, but we don't have a big plan like we did with the rights issue last year. So we are pretty much hopeful with the restructuring part that we just discussed. It will help us to get to better ratios.
All right, Info Edge stock, that has taken a clear turnaround from being in the positive territory. It's down 1.5%, and this is on account of one-time loss of 70.3 crore rupees in its Q4 results. So the net loss figure for the quarter for Info Edge comes in at 13.7 crore rupees versus our poll, which expected over 70 crore rupees of profit for the company. There you go. That's the figure that is really spooking that particular stock and the market as well. We'll need clarity on the one-time loss coming in. Revenues stand at 240 crore rupees versus the poll of 246.6 crore rupees. So fairly in line with what the street was really expecting. And EBITDA at 59.3 crore rupees versus a poll of 82.4 crore rupees. So it's not just a one-time loss, which could be exceptional, but it's also operationally weak compared to what we were expecting in terms of the EBITDA performance of the company. That stock is down 1.68%. We'll watch out for the management commentary really coming in. EBITDA margins at 24.6%, and that is way below the over 33% that was expected by the markets. So operationally, it definitely is looking like a weak quarter. Mangalam, do you have more details on the results?
Absolutely. So the reason why the EBITDA is lower is primarily because the company has advertised more. Advertising and promotion cost has gone to 48 crores, and that compares with 21 crores in the comparable quarter. Looking at their segments, they continue to post EBIT losses in the real estate business, which is 99 acres, so 15 crore loss there compares with a loss of close to 12.5 crores. And the others business that they have, that the loss has increased from about 4 crores to about 12 crores on an operational front. So higher advertisement perhaps for future brand promotion, future brand growth is something that we will be watching out for. That is something we will watch out for and ask the management. As of now, the street does not like the numbers that have been reported. We'll keep an eye out on this and perhaps get the management as well, but not now. After business lunch, Midcap Radar comes up next. Stay tuned to CNBC TV18.